Stuff on YouTube uncensored. What's up out there?
Yes.
And again, Raymond's gonna get technical. I'm the one who helps him get to that. My mic, I'm all talking on the mic. Are you? You're in the screen too?
I think so.
Okay.
I'm pretty sure. Let me just check with my chair real quick.
Yeah, it's just really how do we achieve it? What's the rules of the industry? You know, we're allowed to talk about that. We're allowed to coach you up, educate you. You know, we always talk, and we've been, the shows have been so powerful, but really the basics that we're really getting into, I think, is those three main qualifying factors. Let me get that mic.
Yeah, we definitely should touch on that too. Because...
You know, and that's the basis of this, of really buying homes. And, we're going to talk about reserves. And this is for Raymond Show. Oh, I want to talk to you. If you ever want to set up something, because we're thinking about setting up a little setup at the house. Maybe
That'd be awesome.
for your show too.
Yeah.
Like
That'd be awesome.
A little studio?
Yes.
Dude.
Because we'll be on your show anytime you want.
Absolutely. Okay.
Absolutely.
Do you guys
Shout out
see?
to Mortgage
Hold on.
Mortgage.
Do you guys see some of the shows that I do or some of the videos that I make
Yeah, I do,
on my channel?
Yeah, I do.
I mean, they're just walking around, my properties and
Yeah.
stuff, giving updates and stuff, basically. But I want to start doing shows where I'm actually,
We should
showing
do all kinds
formulas.
of content. We should just do the life.
Oh.
I know ours is mortgage talk. Yours is, but I think that's gonna just have a lot of just organic stuff too. Because it's all revolved around living life.
Yours is investing in real estate. I found my passion. Right?
Yes.
That's what it's called. Okay.
yeah, investing in real estate. I found my passion. My friend one day he tells me, Ray Kino or your name really doesn't do it. You're gonna have to think of a name that catches someone's eye or it speaks to the people. So, and I was just sitting there and how about how does this sound? Investing in rentals. I found my passion. He's like, boom, that's it.
There it is. Yeah.
And I just called my show that. I mean, the channel. So that's how
I like the name. I think it does speak to you.
Thank you.
It's like anything that honestly that I see like on YouTube or whatever that says investing on it or people's passions, I always get interested in it. So I definitely like that name because it catches your eye. You're like, okay, investing and passions. It's two things people relate to.
Absolutely. Awesome. Thank you guys for the feedback. I appreciate that.
Yeah, no.
I really haven't had anyone comment on my channel or the name of my channel, but
Yeah, we're gonna keep
Thank you.
shouting it
Thank
out.
you.
That's what this is all about. They talk about Robert Kiyosaki. I finally say that right. He always talks about having the right team.
yes.
We're like-minded. We became really good friends. We let very little people in our circles.
Yeah.
And I can call you up like I call my buddy Ernie since 5th grade.
Right. Me too.
So
Me too.
it's really, I really love it. I love the relationships you meet in this business. Not even this business, in this industry, or across the board, because there's so many things that link to it.
Absolutely.
I'm going to also bring up, I've been hearing a lot about people are using their credit cards to survive. Let's talk about it. That's what we're talking about. How does the hard worker barely making it,
Yeah, that's exactly what I want to ask
Yeah.
you. Like, how'd you even start stacking and all that stuff? I really want to dive into that.
I wanted to just reach into, just as a shout out,
Yeah.
because going back to simple interest, credit cards, even with rates right now, when you can consolidate and save hundreds to 1,000 or more, because when we're comparing minimum payments, managing it, the achievement, that's really wanted to get out there on YouTube on, it's the achievement. I hear about everybody comparing interest, all the channels. Guarantee you compare our channel, what I'm saying with simple interest and why it's important. You do not save $1,000 a month. Simplify it. Still have good equity. Achieve it while you can. Because it's not about the rates. I got a good rate, but I'm paying an extra $1,000 a month, and my net income going out to to miscellaneous bills. I wake up the next day and I owe the same amount. The next month I owe the same amount. Nothing's getting paid down. So just wanted to say that.
I've actually YouTube.
Okay, so I have a contest to do right in the middle of the show. They didn't plan for this to happen, so.
That's cool. Hey, that gives us.
So yeah, so I have a contest to run. I will have to leave around 3:30ish, so you guys just keep going. I'm gonna try to go behind right here. That way I don't, get it in between the shot.
Okay, that's my. Do you want me to move that? I can move it over. So you have a
Yeah,
little
if you
more-
could, because I don't want to interrupt
Yeah,
the
no,
shot.
of course, of course. I can be in the shot a little more anyway too. Is that good? Yeah, that's good, right?
Yeah. So I just gotta do that. I'll be about
Okay, bye.
about 5 minutes.
Okay.
I'm just gonna answer phones and collect.
So you want us just to keep going? And
Just keep going.
Okay,
And then
yeah.
I'll be right back.
That sounds good.
Yeah.
Sounds good.
we got your back.
Thank you.
But yeah, I was just like, I YouTube simple. You want me to talk in the mic?
Yes, if you could please.
Okay. Yeah, I actually YouTube simple interest, and the videos that popped up, they don't actually explain simple interest like how we explain it in the mortgage.
Are you going to cue us to go to? Sorry for the
No, you're okay.
Yeah, looks like we're all good here. So whenever you guys are.
Okay. Perfect. And welcome back with mortgage.
I'm sorry.
No problem.
Let's go.
Very good.
Okay, perfect. And welcome back to Mortgage Talk with loan originator Robert Bulmer, NMLS number 322918, and myself, Bobby Bulmer, NMLS number 2060902. We are back with Mr. Raymond Aquino and diving even deeper into his story and how he accumulated so many properties, realistically coming from nothing, isn't right?
Yes, good morning or good afternoon, good evening, everyone, wherever you're at. Hi, Bobby. Hi, Robert. Yes, so basically from nothing, growing up in a family of 13 and two bedroom, one bath, right, to the level we're at now. I basically started from nothing, Bobby. Correct.
Yeah. So when you were there, when obviously we're saying nothing because that's when you before you started investing, saving, and being smart with your finances. When you started from that point, how did you save money? How did you put money aside? Because I'm not sure if you lived from paycheck to paycheck or if you were surviving. What did you do to put that money aside so you could start?
Okay, how about my property in 2014? That's what kicked off my investing career, I believe. I didn't know it then, but it was going to be one of my properties in the future. So that property I actually saved up with a 10% deduction per paycheck through my job, and this was investing in the company stocks. So the max that we can invest was 10% in the company stocks at that time. So over time, you do not see that money come out. It basically gets taken out of your check before taxes and invested in the company stock. So it buys shares in my company automatically, and I set it up that way. So over time, it built up to about, was it 18,000?
Wow.
And I didn't even know it, right?
Yeah, you just working, living, and all of a sudden, boom, 18 grand.
Boom.
in your
And
pocket.
at that time, I was going to be moving out of a one bedroom that I was renting, and I thought I was going to move into a 2-bedroom apartment. But my brother, who suggested, you know what, why don't we try to run your credit and see if you can qualify for a loan? And that's exactly what you guys do, right?
Yeah,
you guys are
yes, sir.
loan originators.
Yeah.
So, and we did. We actually went to one of his buddies who was working for a company called DR Horton, and they had their own financing, and I was able to qualify through their financing and was able to buy that property in 2014.
Wow, that's amazing. Obviously, one property leads to another. So when you said that you started investing in your company stocks and it was 10% before taxes, right? Yes. You can basically take that for whoever is listening. You can take that same 10% from your income and save it. It doesn't have to be in a company stock. That's just the way Mr. Aquino was able to do it. But you take that same 10% from your paycheck and you start saving it. And you save it and save it and save it. You don't touch it. You pretend it's a safety net. And then when the time's right and the opportunity presents itself, that's when you can make the move.
Yeah, I think that's a great, disciplining you. That was a way he disciplined himself using the tools at hand. When you're consistent and you're working, you use the tools at hand. That was, that's what, I think was great. The key is how do you stack? How do you, get that
Starter money.
that
Really?
buying power,
Yeah.
So, well, let's recap a little bit. I think, man, we got deep in the last episode. What did you ended up basically, we restructured your whole scenario. You went on and got some good rentals, came across deals, pulled the trigger. rates were really, what you just were dealing with the time, what you could do at the time, and you ended up pulling a lot of cash out, restructuring everything across the board. And then it was time to take it to the next level. That also gave you buying power. We talk about buying power.
Yep.
Everybody has really great ideas. I hear them all the time. But man, a lot of people are doing it who have some money saved up, some reserves. I think that gets us into what we talked about, what we were discussing about what we wanted to bring up was, how did you even, when you get to this level, it's not just 20% down payment.
No, absolutely not. You have to have reserves in the bank account or any account that's liquid, easily accessible, because the bank actually wants to see at least 6 months of reserves. Reserves is, again, your mortgage payments, whatever all your mortgage payments add up to monthly, multiply that by 6, which would be 6 months, right? So, for example, if I had a house that was I was paying $1,000 a month as a mortgage payment, then I would have to have $6,000. That's total of 6 months reserves for that one property. Now, as you buy each property, as you level up, you're going to have to grow that reserve in order to qualify for more loans, because that's exactly what the bank looks for, right, guys?
Yep, exactly.
Yeah, exactly. That's where this is where we're getting technical with this episode, and where you're going to learn a lot. Take these notes and listen very carefully, because let's get back to the 6 months reserves. You take all the house payments, wherever you're at, you have your main house payment, a rental house payment, plus the taxes and insurance per month. So the total monthly payments, any HOAs, and then you add each one up, and then you times it or multiply it by 6 for 6 months. So you have to have that extra money sitting in a liquidable account.
And liquidable means you have access to it.
Not cash. Number one rule, no cash allowed. Mattress money, savings, get it in the bank.
Yep.
2 months.
Yeah, it has to be seasoned in the bank. So a lot of people like to take their money out and save it, and they save it in safe places. Well, time it right, get that money. It's all, in the bank. So that's really, you had to factor that in.
Absolutely. And not only that, I filed bankruptcy in 2009. That's when I got divorced from that Persian, quote unquote, right? Remember the last episode? Anyways.
Yeah.
Okay, so I filed a bankruptcy when I got divorced, and my credit, of course, was shot, right, for the first 2-3 years.
Right.
I couldn't qualify for anything. Now, 2009, mind you, 2014 is when I was able to qualify for that loan, and not knowing that I was going to be able to qualify, but I gave her a shot. A lot of people are scared to know the truth, but unless you go try and get financed or do your homework, you're not going to know where you stand when it comes to qualifying for loans, guys, right?
That is very true. You have to inquire about it. You have to go see. You have to be that person who takes the initiative to go and see what they can do. You have to try.
Yeah, let's take a second to, give our information out. I'm Robert Bulmer. My NMLS number is 322918. Robert's a licensed loan originator. We're both active at FDC Mortgage. Their NMLS number is an equal housing lender. Their NMLS number is 152859. You can get a hold of Robert, myself, and Bobby. His NMLS number, what is it, Bubba?
Yeah, my NMLS number is 2060902.
And our phone number is.
And our phone number is 760-669-7813. So anybody out there who's listening and you want to get a hold of us, or Mr. Aquino, we could answer phone calls and direct you to him if you wanted to talk to him as well. Give us a call. We answer our phone and we love talking to you.
And I have a YouTube channel that I just created this year called Investing in Rentals. I found my passion. Also, you can reach me and leave messages on Instagram at Aquino Ray. Also TikTok as well at Ray Aquino 99 on TikTok. Also, if you're in the Hesperia area, come try out Springhouse Restaurant.
Yep.
It's
Very good.
Thank
very
you.
Good.
It's located at 16441 Main Street, Hesperia, California 92345. Phone number to the location is 760-949-2441. We are an all-American diner. We have implemented a lot of Latino Mexican dishes like menudo. It's a favorite at the restaurant.
Yeah,
So-
one of my personal favorites.
Thank you guys, thank you. And we just took over that business. I believe it was 2018. So we've made a lot of changes, made it better for everyone. Please come out and try the restaurant, guys. Thank you.
Amazing, amazing. Real quick, I wanted to touch back on what we talked about a second ago, which was seasoning your money. Okay, so I just want to be clear for all the listeners that seasoning your money means you have it in the bank for 2 months or longer. So if you have a cash deposit, and let's say you're trying to apply for a mortgage, and you have $5,000 in mattress money. Mattress money means it's out of the bank, it's cash, whatever you save. Like for example, you put it on the mattress to save it. That money has to be in the bank for 2 months before you go to qualify. That's called seasoning your money.
Yep, so that's another little rule to go on. So once you get past your first rental, the right loan consultant will coach you up on those reserves, and that was one of the things we had to do. So get into what. So we got 700 grand. You're hustling, still on the grind to this day,
Yes.
working 14 hours a day. Man, let's get into building an ADU, accessory dwelling unit or accessible dwelling unit. There's I don't know if even the actual term is settled yet, but building an actual subdividing and kind of building a property to buying cash properties, even adding a unit and really rehabbing everything you've had. Man, that really gave you the buying power to take it to the next level. Let's get into what you wanted to talk about today. I know you have some crucial equations. I even brought my notepad because the teacher became the student. When I kind of did my reset with my refi months ago. A couple deals came across. If something happens personally, we're gonna keep you in the loop because Bobby and I and we definitely. I had a few rentals before my divorce in 08, and I'm back in the game, ready. Even in this market, there's ways to win. There's a win-win, and he's going to teach us kind of what he's going to and figuring out and what's been kind of working.
Okay, so after that property that turned on that light bulb and motivated me to educate myself, I bought a property after that, which was the 2 houses on one property. In 2021, we closed escrow. Beginning of the year, I believe it was February, March time of 2021. So just to give you an example of how this purchase worked out and what the return on my investment was. So this property, first let me give you a little history about this property. Owning this restaurant, it gave me the opportunity to meet a lot of individuals and become friends with a lot of interesting individuals, I should say. So my friend, his name is Paul White. God rest his soul. He passed away not too long ago. But he would always have breakfast and lunch at the restaurant. I would always sit down with him and chat. So one day I just started talking about what I do, putting myself out there, buying real estate, investing in real estate, single family homes to be exact. And he just mentioned at that point, you know what, I have a property I'm planning to sell. It's 2 houses on one lot. I live in one, and the other one I rent out. I told him, wow, let me go check it out. And that's when I went and
Oh man, this is gut wrenching, guys, because he changed this senior's life, and from being alone and just even what he would have netted after the fact would have went through it. So with the quality of life, the care, and how you took care of him and let him stay 100% rent free in the main unit where he's lived, where he was comfortable. And oh man, I'm just getting Holy Spirit chills right now. Get ready to shed some tears. I know the story intimately, and it gets me choked up every time I hear it because, man, you and your wife.
Yes, I was gonna mention her next. So my wife, she started taking care of him, and this gentleman, Paul White, didn't have a wife, didn't have any kids. The only closest family member he had lived in Orange County, and they rarely saw each other. So basically, we took him to the doctors, we got him his medication, we made sure that he was good. We took care of him, right? Out of the kindness of our own heart, because we have parents as well that are older, and knowing that he needed help, we were there to help him. Thank God that he was in our path, and so the deal was, I told him, okay, Paul, I'm gonna offer you this much, and I'm gonna allow you to stay where you're staying. Just pay your bills like you normally do. You don't have to worry about taxes anymore, about property tax. You don't have to worry about insurance on a property any longer. Just pay your regular bills.
Wow, that is amazing.
It was
Just,
win-win
just
too.
that, by the way, is such a kind-hearted thing to do.
Oh man, condition and what others were offering him cash. That's why he came to Raymond, is he was giving him the win-win deal, you know, to where he made money, he was able to have a quality of life, and then Raymond used his equation to see, how he, that's why you beat everybody up. So
Okay.
what was your equate, that's just,
Yeah, sorry about that. I interrupted you. I got off track.
but
Like
yeah,
that. I just think that really is so amazing. How much you truly help.
yeah,
that
and
person.
guess what? He had to rehab and gut and clean the whole. It was just health wise was better. His just because you.
And to give a lot of credit to my wife, guys, she
Yes.
she began taking care of him even before we thought of buying the
Yes.
property. So this was years before the
Wow.
property was sold to us.
That's
That
so
my wife started taking care of him
Wow.
and taking him to his appointments and making sure that he was okay, right? Because he can barely walk, but he would manage to get to the restaurant every morning and sometimes for lunch as well. Now, so just to give you a quick rundown, beginning of 2021, I offered him $230,000 to buy this property, right? With the condition that he would be able to live in the rear house with no rents, so he'd be living there free, just
Property tax.
as long as he pays for his utilities. And
100% free.
but remember, this is two houses on one property. So the front house, I was able to renovate it and rent that house out, which paid for the mortgage. So let me give you the rundown on the numbers. $230,000 is what I offered, except the property had solar panels, which was about $20,000. And Robert, being such a great loan originator, he's like, why are you gonna? So my thought was, okay, why don't I pay $10,000 out of my own pocket and the seller pay
Taking
$10,000?
10,000 out of his profit.
Yeah,
Because he was profiting good.
and then so Robert, explain that part that you suggested, please.
We always use and to like I said, that's why we're gonna simplify everything, because to me it's like second language. So it's worth 20 grand. It appraised a little higher, and we were able to say, hey, why not cover it with the loan, increase the purchase price. That way, we're letting the purchase price, and when you
We're talking about the solar panels.
yeah, because here, let's get into a rule. One of the rules is when you're buying a house, the bank you're getting or the lender, the rules are, we're going to use the lower of the appraised value or purchase price. So let's say your purchase price is $230. Well, if the appraisal comes in at $220, we're going to look at it as if the purchase price is $220. It's time to go back to the negotiating table. At that point, your realtors will come to you, to the buyer's realtor and the seller's realtor, and they're going to go, okay, it appraised for $220. What do you want to do? Well, let's see if they'll drop the price to $220. This is when the buyer lets the seller know what the appraisal is. Usually we tell them it came in good, no repairs. But the one time we tell the seller what the appraisal amount is if it comes in lower. So, hey, will you lower the purchase price 20 grand? Well, the seller goes, no, I don't want to do that. Nope. Let's say the buyer really wants it. Okay, they cover the 10 grand difference. Then their loan's based on whatever the down payment based on the appraised amount of 220.
So this is being creative. Robert, what he actually did was instead of getting the seller to lower his price, he offered him 10,000. We actually upped the list price of 230 to 240, but that whole amount of 20,000 would be paid from by the proceeds, right?
Exactly.
From the sale of the property, because the property was already paid for, guys. When he sold it to me, when I bought the property.
Oh, that's good.
Yeah.
That's awesome.
Yeah, and it needed over 100,000 in renovations.
Actually, the renovations. Let me get to that really quick. Okay, so mind you, I paid with closing costs and everything. The escrow cost was $241,699 with 82 cents. Right. The rental cost total for the front and rear when it was available was 45,000 total. Total in was 286,699,000. I refinanced out because I bought that property cash. I was able to renovate it with cash as well, right? And so when I did the refinance, Robert, remember I pulled out about 232,000,
Yep.
which left $54,699 in the deal of my own money, right? I left that in the deal. So when I do my calculation, when I add the two rentals together, the front one's renting out for $1,980, the rear for $1,950. That's a total of $3,930. Now the mortgage right now, it went up because of property taxes, those dang property taxes, right?
Yeah. Yes.
So it actually went up about $230.
Wow.
But my payment now on that property is $1,483. That's the mortgage, the property tax, insurance, right? What is it? MITI.
Yeah.
Sorry.
PITI.
PITI. Sorry,
PITI,
guys. PITI.
Principal, interest, taxes, and insurance.
Thank you, guys. Okay, so after that is deducted, which is $1,483 from $3,930, my that number would be $2,446. Now I pay trash, so trash is $33 a month.
Subtract
That brings down us to 2,413. I also save at least 3% every month, which goes towards any unexpected fixes, unexpected
unexpected expenses.
expenses. Yeah, so that's an additional $72 that I set aside for those expenses, and monthly. Oh, when it's all said and done, this is my cash flow for the property. This is just one property, guys. $2,341.50 monthly cash flow, okay? That adds up annually to be $28,098. Now, when I get that number, I divide that by the total amount left in the deal, which is $54,699. My return on investment, guys, where can you get a 51.36% return on investment? Where?
That's huge.
Tell me.
Yes, and that was again, and we kind of got sidetracked on that. That is unbelievable. But you rented he lived rent free. We kind of got sidetracked on what happened. That's what the gut wrenching happened. Why don't you give us the end of that? What happened with the elderly man staying there?
So he was staying there.
This is a COVID. I think this has to do with COVID.
No. Actually, COVID is when he was placed in an elderly home.
Okay.
And so we found him. Well, my wife calls me up, and she says, "Ray, we haven't seen Paul in the restaurant for about 2 to 3 days now." And so we had, I go, you know what, let me go check on him. So I arrived at his property, knocked, his car was there in the driveway, kept on knocking, no one answered. So I had the key with me, I let myself in, of course, knocking on the door. "Paul, it's me, Ray, are you here?" And I hear a faint voice in the bathroom, "Ray, I'm over here." You know, and I opened up the bathroom, and he's on the bathroom floor. Who knows how long he was there? You know, he slipped and fell.
Poor grandpa.
Yeah, and we haven't seen him, mind you, for 2 to 3 days. So I'm thinking he's been there for at least 2 days, right? At least. And he's like, "I fell asleep." He tells me, "Ray, I fell asleep for a little bit. I don't know how long I've been out." But then he's telling me, "Thank God you're here." So we help him out. My son finally arrived. I called him up. He arrived to help me pick him up. And at that point, we call 911. He goes to the hospital, and at that point, he can't take care of himself at that point. So they put him in a facility where they take care of him now. But not now, not any longer. God rest his soul. He passed away not too long ago. But that was the story with this property, and
But yeah, after, once, you know, again, God bless that he, you know, you were there for him. You know, that's the moral of the story. And,
thank you
and
to my wife also.
Yeah, and your wife. And I don't know if you want to say her name.
Alma Aquino, yeah.
Alma, she's amazing.
She works at the restaurant. You guys can find her there 4 days out of the
super
week.
clean. I love it. It's so clean and delicious. But yeah, that was But after that happened, man, bam, you were able to.
Yeah, after that happened, guys, I was able to rent both properties out, and right now
51% return on investment.
51% return on investment on the money that I invested in this property. Now, what does the stock market average out to? About 7 to 8% annually.
Yep.
I'm not sure, but compare that to 51%.
And this is
Yeah,
where
51 blows that out of the water, by the way. Completely.
and you hear about you're hearing on the news about rates and stuff. Is that stopping you? Is that stopping you from, we talked about your recent one, where you want to cash out? Would you, rates are where they're at, but is that going to stop you from replenishing your funds to take it to another level?
Absolutely not, guys. Don't let the rates scare you, okay? Because
simple interest. We talk. Yes.
I have a whole episode dedicated watching YouTube.
Was that the first one?
That was one of our first ones, yeah.
Okay.
That was actually the first time I actually heard that story from start to finish, where you were helping that person. And you are completely right. That's gut wrenching. It's a tearjerker.
Amazing.
It's amazing.
God
And
bless you guys.
yeah, God bless you guys. And that is truly a amazing story. And that 51% is also amazing. But I had a quick question for you too. And since we're talking about rates, and obviously rates aren't going to stop you because you're a dedicated investor. If, and I'm not saying the market's going to crash, but in the event, let's say for example like a 08 crash, what is your plan to keep these properties?
okay, perfect. I love that question, Bobby.
Well, that's a
Because
good one.
the reason being, I get this question from a lot of family members, friends, acquaintances, right?
Yeah.
They tell me, aren't you afraid that the market's going to crash? You're going to lose a lot of money. And I think to myself, well, I'm buying to hold the property. I'm not buying to sell them.
Long term.
Long term, remember that, long term is a lot different from flipping. Flipping is a total different way of investing. So I think to myself, I'm buying long term, and I tell them, and I have reserves for at least 6 months per property. So even if my renters skip out and they don't pay me for 6 months, I have reserves. And talking about reserves earlier, right? How important that is, because
why the big ones.
yes, you don't want to invest hundreds of thousands of dollars in an asset to where you're not protected with reserves, because that's a lot of money you're gonna lose if you don't have at least 6 months of reserves, man. And that will cover me in case there's no renter in the property per property that we have, guys.
That's amazing. That is amazing.
And it goes back to what we talked about last week, is how we structured it. We let borrowed money, in the end, when we're and again, when he pulled that cash out, do you think, man, he's the one coming to me going, what's the lowest rate, Robert? I'm doing some equations. What's the lowest rate they're gonna legally let me buy down? Because
I honestly thought he got sick of my calls like that.
no, I love it, because we designed it to where he can lower his rents below dirt cheap. Everybody needs a place to live. He can offer the cheapest rent in town if it gets back to rents 10 years ago.
Thank you for bringing that up, Robert. Okay, just to give you that example, remember my rents
He's
total.
netting right now. We're in a housing crisis, guys. He's netting right now
28,000 annually
annually net.
on one property.
Wow.
That's just one property, guys.
That is, and again, timing. One house leads to another. Why were you talking about buying now? You don't think he's going to replenish his money once his most recent investment, the one he turned from a 2-unit into 3 units? Do you think that he's not going to hesitate to refinance that again when and if rates drop? But it ain't gonna stop him. He's gonna get that buying power, and he's going for the next big move.
I've already been doing my numbers, Robert, and calculating if I did refinance with a current rate of 6.5%. That's about the going rate, right now?
Well, we don't talk specific on
Oh,
rates, you know,
gotcha.
or when
Sorry.
it comes to the loan origination, you're allowed to. There's a lot of factors that factor into the risk. It's all about risk. So, it all comes down to risk and what you qualify for. So, but you can definitely, you have to choose the rate. And we'll get into that,
Okay,
choosing the right
gotcha.
rate. We're getting close to the end of this. You guys can
Wow,
get a hold
guys.
of us at 760-669-7813. Tell them about it.
And again, that's our phone number if you guys have any questions and want to talk to us personally. This is Bobby Bowman. My MLS number is 2060902. And the other person that was just talking is Robert Bowman. His MLS number is 322918. FBC Mortgage is a equal housing lender. Their MLS number is 152859. And again, you can reach us at 760-669-7813. And Mr. Aquino, do you want to shout out your YouTube as well?
Investing in rentals, I found my passion. I'm on Instagram at Aquino Ray and on TikTok at Ray Aquino 99. And
Give them the restaurant info real quick.
Yeah.
Spring House Restaurant, 16441 Main Street, Hesperia, California, 92345. Come out and enjoy a great meal. We're open from 7 to 4 p.m., guys, daily. Come check us out, please.
Right on.
And
So
by
is-
the way, very, very, very clean restaurant. I want to point out,
And
I
the
haven't
food
eaten
is
there
amazing.
more than a
Thank
few
you.
times, and you know, it's one of those things when you go to that restaurant, you wake up in the morning, you're like, man, I want to go to Spring House right now.
Thank you.
It's like
Thank you
you're in
very
the
much.
mood for it, and you
Yeah.
got to go do it. And the food is great. It's a lot of food too. It fills you up, and it's good.
Man, I feel like we haven't even touched the tip
Of the iceberg.
That's
huh?
why-
of this conversation, guys.
Right.
That's why we're gonna keep having you
Yeah.
back, Ray. You know, so we're gonna definitely keep having you come back
Okay.
as long as you want to come back because we're still getting into it. You know,
Yes.
so
This is just one of the properties, guys, that we have.
yeah. And we have a lot of episodes to
Yeah.
do, and we want to keep educating because we do get into side notes that are important. So
Yeah, and that is important too. And on that education factor is are we good? Oh, okay. Yeah, on that education factor is, you know, you have to understand what he's been through start to finish to understand how he's built it. You know, you have to understand the motivation side of it. You have to understand that he learned the finance part. You have to understand that he tried and he did it.
don't let rates scare you. If you can, it doesn't get easier. It doesn't get cheaper. Everything's up and down. Get while the getting's good. If you can pull it off, pull it off. There'll be a time to save money. There'll be a time where a house leads to another. So everybody needs a home base, and trust me, once you own, you never go. It's very, very rare you go back to renting. So give us a call, guys. 760. Give Robert and Bobby a call. Myself and Bobby. 760-669-7813. Yeah, Bob.
Okay, yeah, and our NMLS numbers for Robert is 322918. Mine is 2060902. FBC Mortgage is the equal housing lender. Their NMLS number is 152859. Again, our phone number is 760-669-7813.
Thank you, guys.
Thanks. Good show.
Appreciate it.
Is that it? Or we...
Good.
Nice. That went great. I love hearing when you talk about the financial part and how you break the numbers down. Because, you know, it's good to know and to hear, you know, how you save the 10%. Okay, this is what I did. You know, you take that 10% of your income, you put it away, you don't touch it. And then you're telling me you have the 3%, the 6 months reserves that you take from the properties just in case something crazy happens.
So even before we buy the property, Bobby, I already have that reserve set aside before we even buy that property.
Right, and see, I think, and that to me, that's amazing. The fact that you can pull that off and discipline yourself to save the money, I think that's what people want.
My wife. You have to, you have to have a good woman. It's my wife that saves all the money.
Yeah.
So yeah.
And I'm the one that invests, she's the one that saves. So
I
thank,
like it.
thank
I like
you
it.
to my wife.
Teamwork.
Yes.
You have to
yes.
have a teammate.
Absolutely, guys.
Yeah.